Hello, Maverick traders, and welcome to today's currency recap. It is January 23rd. What an exciting way to start the week. Let's get right into it. So the market's basically gone full risk on here. The equity rally continues, crypto's outperforming, and the market is hoping that that vaunted Fed pivot is near. Okay, so let's take a look at the S&P 500 first. Right now, we're bumping right up against the neckline of this large inverse head and shoulders pattern. Normally, I would say go long on the break of a neckline of a pattern like this. Buy the market. The only issue I have is that sometimes a pattern is so blindingly obvious that everyone sees the same thing. And that's definitely what I'm seeing with this inverse head and shoulders pattern. It's just so obvious. I think so many people have spotted it. It makes me wonder whether or not it is, in fact, a trap. But that being said, I do think it's an interesting risk-reward proposition. If we have, if this is a valid inverse head and shoulders pattern, it may very well mark the end of the bear market. Now, I'm personally of the view that I think the bear needs another swipe at the stock market before we stabilize, which is why I'm leaning more towards the idea that this setup is a trap. But there you have it. It's on the price chart. Do with that information what you will. Now, here we have the total world stock index, VT, and in this price chart, we can see that we have broken and closed above the neckline, although not very convincingly. I'd like to see a few more days of buying and holding above this neckline before I become a little bit more convinced of its validity. But no doubt about it, equities are looking bid at the moment. And crypto, we took out a resistance level that I laid out last week, and we're now trading towards another resistance level that got put in August of 2022. So that comes in right around 27,500. That would be the next major objective for crypto bulls. But look at that relative strength index reading. It is so overbought. We need to have a healthy correction first, in my opinion, before we go significantly higher. All right, so the market outlook stands at a +2. We just need those moving averages to kind of slope and point a little bit higher right now, and then we'll have a +3. Of course, everything can change quite quickly, as has been the case over the last several trading sessions. Taking a look at the economic calendar, you can see that we've got a busy week this week. We've got inflationary reports coming out of the UK Tuesday morning, and then there's inflationary data out of the US, Australia, New Zealand, and then on Wednesday we have a large possibly the large event for the week, which will be the Bank of Canada Monetary Policy Report and Rate Statement, as well as the press conference. And then on Thursday, we've got advanced GDP in the US. And then on Friday, we have core PCE price index, so more inflationary data coming out. Lots of market moving events on the calendar this week. Okay, so in terms of currency analysis, usually I'll say I'm not all that excited about cryptocurrency. But right now, some cryptos are doing really, really well. I apologize for the labels here. That's not up to date, but we are going to take a look at some cryptocurrencies. I'm very interested in Bitcoin and Ethereum in particular. And then over here on the fiat side, the yen was the clear loser today, and the clear winners were the Australian and New Zealand dollar. In terms of velocity, no surprise, right? We've got the Aussie and the Kiwi at +2 and +3, the yen at a -3, and the Swissy joining it at a -2. So, all right, let's take a look now at some potential trades, because there are lots of interesting things afoot. I'm actually going to start off with crypto. Okay, so Bitcoin, I really like what the market's been able to do here. This is looking excellent. I do think we're due for a pullback, however, and I think we will pull back to roughly the $20,000 level at least. If this is a bull market, that's kind of where I'd like to see the pullback in Bitcoin stop. I'm just going to throw some Fibonacci levels. You can see, 38.2% is right around where 20,000 comes in. And we'll see moving average support there as well. So Bitcoin, very exciting. I wouldn't buy it now, but if we get a very clear bull market pullback, I could be persuaded to buy a little bit. And then over in Ethereum, I think it's, you can see here I've got a target around $3,000 in the intermediate term. But very similar story to Bitcoin. I need to see the relative strength index on the daily chart drop back to manageable, sustainable levels. Right now, this is not sustainable. We can't hang out in these overbought conditions for this long. So same kind of thing. I'd expect to see a pullback to about 1450 to 1400 or so if this is in fact a developing bull market. Okay, moving on to the currency side of things. Let's start off with the dollar. Still trading steadily downwards towards my target of 116 in the basket. You know, that's the end of May high from 2020, low, sorry, from 2022. So a little bit lower to go in the dollar before I think we see a fairly sizable relief rally. The yen, you know, it's very weak last two trading sessions. However, you know, am I convinced that we're going to go to crashing off to new lows here in the yen? Not necessarily. You know, I mean, there is trendline support here. If this trendline breaks, you could argue that we have a quasi head and shoulders, left shoulder here, head here, right shoulder here. Now, if we do break this trend line, and we are very close to it, now I wouldn't be surprised to see us trade back towards this consolidation in middle of December. So you know, look out for that. That would give us a fairly steep move in the yen. But look, I do think the yen on a long-term basis has bottomed out, and we will see yen outperformance over the you know, for good periods of time for the remainder of this year. How's that? So I'm not looking to necessarily go short the yen. I'm not looking to buy it yet. I would prefer to buy the yen rather than be short the yen, but I need the right setup, and I don't have the right setup right now. I'm just putting this on your radar so you know what I'm looking at. Here we've got the euro kind of trading in this triangular formation, which means we can, you know, get a break out the top side or the bottom side. Not sure which, don't really care. Doesn't really matter to me. Either way, I think we will get some volatility in the euro very, very soon. What I would say in cases like this where we could get a break either side is I would look to see if there's a currency that is clearly outperforming head and shoulders above everything else right now. So for example, if the euro triangle broke out to the downside today, you know, I'd be shorting Euro Aussie, which would have been a good trade today actually. But I think if we break out this triangle, it'll be even stronger. Why Euro Aussie? Because the Aussie is outperforming. You know, last week I thought we might test support once more, but nope, we've broken out of resistance, and I think we're now headed towards my next resistance area, which will be the consolidation zone over the month of August and early September. So, you know, quite a nice move higher in the Aussie if that analysis is right. Would really love to pair the Aussie against perhaps the US dollar. I think that's a very nice trade in the making. New Zealand dollar lagging the Aussie, but on a short-term volatility basis, it's looking very bullish. Looks like a nice bull market pullback there. We just have to break out this channel, and I think there'll be some great opportunities there too. I don't have it highlighted, but the Swissy is interesting to me as well. You know, I mean, the Swissy is traded in this range, right, between the highs from end of September and the lows from early November. Right now, we're in the lower to middle portion of that range. So I really would wait to see if the Swissy can trade back into the lower bound of this range before looking for Swiss franc strength. You know, and similarly, if we're in a range, I wouldn't look to short the Swissy unless we trade back towards the upper end of that range. And of course, eventually this range will break, and hopefully by then we'll have a more clear directional idea of what's going on with the Swiss franc. All right, so there you have it. That is what I'm looking at on the board in terms of currency trades this week. Okay, now in conclusion, you know, the yen does remain risky overnight, wild swings. We have a volatile market. In my opinion, you know, there isn't very clear directionality yet, although, you know, you could say obviously the dollar's done basically a 50% correction since it topped out in the index in around November. So yes, the dollar's been in a downtrend, but, you know, otherwise I don't really see clear follow through day after day after day. You know, I mean, for some days the yen was strong, and then it's weak for several days. So I think keeping the trading on a slightly shorter term basis makes a lot more sense right now. And because the potential for these swings is so high, and because we have such a news heavy week, we really advise all you traders to keep mind of proper position sizing, and of course, always follow your trading plan. Okay, so that's it for me, folks. You can see here on the right-hand side, there isn't too much on our calendar at Maverick Currencies for this week. mostly just our regular updates. However, on Thursday, the 26th, we have a class, How to Pick Your Trading Time Frame, which will be pre-recorded. Okay, folks, thank you very, very much. I will see you guys on Thursday, I believe. So see you Thursday. See you soon. Take care, everyone. Happy trading.